Hi, everyone. We've dealt with the concepts under Ind AS 7, which is statement of cash flows. We would now like to test those concepts with the help of questions to test our knowledge and understanding on the standard. We are provided with this question, which says that Green Limited's summarized cash flows cash account is as follows. You are required to prepare a cash flow statement for the year ended 31st of March 20, right, using direct method. Importantly, it's a direct method, and let me clarify that direct method is relatively straightforward. We just need to pick up, the inflows and outflows, and that's how it works. There is no adjustment that you would normally make, for any provisions or non-cash items like depreciation, etc. We just need to pick those items in terms of which of these items fall under the operating activities and which of these fall under the investing activities or investment activities, and of course, which of those follow in the financing activities, right? We have provided the summary of the bank account for the year ended 31st of March 2020. Opening balance, so that would be, the cash balance straight away, and so is the closing balance here. So we just need to look at, there's a difference of 2 lakhs. 2 lakh has increased in 1 year's time. So how this increase has come is something that we want to pick up. Okay. So the approach that I would suggest, that I would recommend in such kind of situations is you just pick up in terms of what all these items, the other items would be a part of in terms of the categorization of the activities. Okay. So for example, if I'm given the issue of equity shares, it's clearly an example of a financing activity. Receipt from customers is an operating activity. Sale of fixed assets is an investing activity, right? Similarly, creditor payments is an operating activity. Purchase of fixed assets is an investing activity. Overheads is an operating activity. Payroll is an operating activity. Tax payment is also an example of an operating activity. Dividend payment and repayment of bank loan are both financing activities. Okay, so to start with, what we can say is that we need to use the formats very, very clearly for the examination in case such question comes. We are given Green Limited, and of course, the requirement is to prepare a statement of cash flows for the year ended 31st of March 2020. Okay, so let's use that perspective. Green Limited's statement of cash flows for the year ended 31st of March 2020 using direct method. Okay, now we start with cash flows from operating activities. That's our first categorization. So let's say it's A, and we are aware of it that receipt of customers 56 lakh, and then there are all outflows, 40 lakh of creditors, 4 lakhs of overheads, payroll, and then the tax payments. They're all the amounts. So what we do is basically we take the receipts first. So we are saying receipts from customers, which is 56 lakhs, right? Less payment to creditors. We also had payroll, overheads. Let's look at those amounts as well. Overhead expenses 4 lakh and payroll is 2 lakh. Okay. And the payment to creditors is of course 40 lakh here for us. So these are all outflows. We'll take the net figure. It says that 56 minus 40 minus 2 minus 4 would be 10 lakh. Now this would be cash from operations. And then of course we also have the tax payment, right? So that's a separate line or the segregation done. Tax payment is done for 5 lakh rupees, which means that my cash flows from operating activities is going to be 5 lakh rupees. So just bring that amount as, let's say, we just reflect that as A, for example. Okay. Now, when you look at the investing activities, there is a sale of a fixed assets of 2 lakh, and also there's a purchase of fixed assets of 4 lakhs, right? So what we do is we take the second heading, cash flows from investing activities. Let's call it B. So we're saying sale of fixed assets, which is an inflow of 2 lakh, and then there's also a purchase of fixed assets, which is an outflow of 4 lakh, which means that the net cash flows from investing activities will be 2 lakh, and let's call it B. That amount is referred to as B. And then finally, we have cash flows from financing activities. Okay. Now we are provided that there is a issue of equity shares 6 lakh rupees. There is a dividend paid 1 lakh, and there's a repayment of bank loan of 6 lakhs. Let's take these numbers as well. So we are saying issue of equity shares, right? And then dividend payments, and also repayment of bank loan, right? So what these amounts are, 6 lakh is the shares, and then we have 1 lakh as dividend, and repayment of loan is 6 lakhs as well. Okay, we're saying this is 6 lakhs, this is 1 lakh, and this is 6 lakhs. So net we have, let's bring it here, call it C, which is cash flows from financing activities. Okay, so what have we got? We are given that there's a 5 lakh positive, there's a 2 lakh negative, and there is 1 lakh negative, which means net the changes, right, is 2 lakh positive. So what we want to say now, changes in cash flows, which is A plus B plus C, that comes as 2 lakh, and we are now able to reconcile that. Opening balance of cash, which is 1 lakh. So ideally speaking, this should result in 3, and that's what our closing balance is. So closing balance of cash. We should also be using cash equivalents as a term, right? That's precisely the requirement of the standards. So this is how we are able to reconcile or prepare the statement of cash flows using the direct method. Okay, let's have a look at the formal solution as well. Green Limited statement of cash flows for the year ended 31st of March 2020 using the direct method. We have got operating activities 5 lakh. Likewise, we have got investing activities -2, and financing activities -1. And then finally, there's a reconciliation where we say the net change or an increase is 2 lakh. My opening balance is 1 lakh. And of course, my closing balance is 3 lakh automatically. All right. Thank you very much.